Hi everyone, I'm Fakrizzaki Ghazali, Fixed Income Strategist at RHB Banking Group. In this podcast, I would like to share our observation of foreign holdings in ringgit government bonds. First, foreign investors turned net buyers in August amid attractive yield differentials and relative weakness in ringgit, which provides cheaper entry costs. Foreign investors were net buyers in the month of August with an additional net investment of 3.6 billion ringgit compared to negative 4.7 billion in July. On a year-to-date basis, cumulative net outflows stood at 5.3 billion ringgit compared to positive 31.8 billion in 2021 and positive 17.2 billion in 2020. On relative basis, total holdings by foreign investors dropped to 23.2% of ringgit government bonds outstanding from 25.4% in December 2021. Persistent interest rate hikes in the US could be the main factors for the outflows, but we view yield differentials remain attractive for investors with emerging markets mandates. Relative to Indonesia and Thailand government bonds, foreign investors' ownership in ringgit government bonds are more stable. In terms of majority of foreign holdings in ringgit bonds, they are more strategic and long-term in nature, which provide stability relative to peers. As such, ringgit government bonds are among the few outperformers in the region as total returns back to positive. Return from ringgit government bonds are back to positive territory despite persistent tightening by central banks globally. Most of other local currency government bonds under our coverage are in red, except for China government bonds and Indonesian government bonds amid relentless support by the PBOC and BI respectively. Domestic institutional investors remain the DNA of ringgit government bonds. Ownership structure of ringgit government bonds to remain intact in our opinion, with banking and financial institutions, pension and mutual funds account for more than 70% of total government bonds outstanding. In summary, we expect domestic investors to anchor demand for ringgit government bonds amid local safe haven status and attractive yield pickup to the portfolios. Majority of foreign holdings in ringgit bonds are strategic and long-term in nature, which provide stability relative to peers. Nonetheless, the balance of risks are coming from the political uncertainty from General Election 15 or GE15, delayed in fiscal reforms from Fiscal Responsibility Act and medium-term revenue strategy which is yet to be tabled, and the narrowing yield differentials between the MGSs and US Treasury could trigger further outflows. Thank you for listening to the podcast. Have a good day ahead. Stay safe and stay healthy.